Every trade begins before the trader presses the entry button. It begins in the moment when he looks at the market and his nervous system is already interpreting what is happening as an opportunity, a threat, pressure, a chance, risk, or the need to urgently do something. The same chart can be read completely differently depending on the trader's state. In a calm state, the market is perceived as structure, information, and a set of probabilities. In an overloaded state, the same market can feel like danger, a challenge, a loss of control, or a test of personal worth. This is why in trading it is not enough to know a strategy, see levels, understand patterns, and know how to open a position. The deeper question is from what state does a person apply this knowledge? Because a strategy executed from clarity and the same strategy executed from fear, pressure, or euphoria can lead to completely different decisions. A trader may know his plan but break it in a moment of tension. He may understand the risk but increase size under pressure. He may see a good setup but freeze before entry. He may close a position too early because the body can no longer tolerate uncertainty. Or he may enter impulsively because the desire of control has been activated inside. On the surface, this looks like a discipline problem. On a deeper level, it is often a state problem. Lotus trading is built on a simple and powerful foundation. Trading starts within. First comes state, then perception. After that, decision, and only then, action. The market will always contain uncertainty, speed, risk, and pressure. The trader's task is to develop an internal system that allows to remain clear inside the uncertainty. Professionalism in trading begins not only with market analysis, but also with the ability to manage yourself the moment when the market starts to apply pressure. Now let's look at what stands behind this from the perspective of the brain and the nervous system. When a trader makes a decision, he is not working only with the chart, price, levels, and market structure. The entire nervous system becomes involved in the process because the market constantly contains uncertainty, risk, speed, and the possibility of loss. This is why a trader's state is not an abstract psychological topic, but part of the real mechanism of decision making. The market provides data, price, volume, movement, volatility, levels, candles, and the reaction of participants. But the decision is made by a person, and that decision passes through the body, attention, emotions, memory, past experience, expectations, fear of loss, and the ability to tolerate uncertainty. This is why trading is not only the analysis of an external system, it is the interaction between the external market structure and the trader's internal system. If the internal system is overloaded, a person may see the right information but respond to it from tension rather than clarity. If the internal system is stable, the trader has greater access to attention, logic, patience, and the ability to follow the plan. This is why at Lotus Trading we view trading as a process where the market, the nervous system, and the quality of decisions are directly connected. And this is where the key point appears. The market almost never gives complete certainty. A trader works with probabilities, not guarantees, which means the nervous system is constantly facing a situation where the outcome is unknown in advance. For professional thinking, this is a normal part of the market, but for the nervous system, uncertainty can be perceived as a potential threat and activate ancient survival mechanisms that were originally designed to protect humans from physical danger. When the outcome is unknown, the brain begins to search more quickly for signs of threat, loss of control, and potential damage. In trading, this can happen at the moment of entering a position, during a sharp price movement, after a loss, in high volatility, or when the market moves against expectations. Rationally, a trader may understand that this is the part of the probabilistic game, but the body can react as if something dangerous is happening. This is why, in moments of pressure, breathing may become faster, the jaw may tighten, the shoulders may contract, the internal dialogue may accelerate, and the urge to urgently do something may appear. From the market's perspective, it may simply be a price movement. From the nervous system's perspective, it may feel like a threat that requires an immediate response. Behind this reaction is one of the key structures of the brain, the amygdala. The amygdala is responsible for fast threat detection and helps the body respond immediately to potential danger. Its role is to detect risk before rational thinking has time to calmly analyze everything. In everyday life, this mechanism can protect a person because it helps us respond quickly to real threats. In trading, the same mechanism can create distortion because the nervous system doesn't always separate physical danger from financial risk. For the amygdala, a sharp price movement, a losing position, a red candle, or the threat of losing profit can feel like a danger signal. This is why a trader may intellectually understand that the market is simply moving, while physically experiencing it as pressure, threat, or loss of control. In trading, the amygdala can be activated by specific market triggers. It can be a sharp red candle, a losing position, a sudden move against expectations, missed profit, high volatility, or the feeling that the market is about to move without you. For the chart, it is simply a price movement. For the nervous system, it can become a signal of urgency, danger, or loss of control. In these moments, the trader begins to feel internal pressure to act faster than the plan requires. He may want to close the position immediately, increase size, enter without confirmation, cancel his own rules, or get money back right now. The stronger the trigger, the higher the probability that the decision will come not from analysis but from reaction. This is why the professional work of a trader begins with the ability to notice the moment when the market stops being just information and begins to be perceived by the body as a threat. When a market trigger is perceived as a threat, the brain can shift into survival mode. This mode exists to protect a person quickly in a moment of danger, so it activates automatic responses: fight, flight, or freeze. In trading, this doesn't look like physical running or fighting in the literal sense. It shows up as an internal tension, impulsivity, a sharp urge to act, loss of mental flexibility, or the inability to make a decision. Fight mode can look like the desire to win the money back, prove the market wrong, or recover losses immediately. Flight mode can show up as premature exits, avoiding a good setup, or refusing to look at the market after loss. Freeze mode can appear as paralysis, endless analysis, the inability to press the entry button, or the feeling that the trader understands everything but cannot act. In that moment, a person may think he is making a decision, while in reality, his nervous system has already chosen a protective reaction. In trading, survival mode shows up through specific behavioral patterns. A person may enter impulsively because an internal sense of urgency appears, along with the fear of missing the move. He may start revenge trading when a loss is perceived not as part of the statistics, but as a personal hit that needs to be compensated immediately. He may close a position too early because the body cannot tolerate the tension, even though, according to the plan, the trade still needs space. He may endlessly analyze the market, look for additional confirmation, and delay the entry because being wrong begins to feel too dangerous. He may break risk rules, increase size, move the stop, or cancel his own rules because in the moment of pressure, the desire to regain control becomes stronger than the trading system. From the outside, this may look like a lack of discipline, but internally, something else is often happening. The nervous system is trying to reduce tension in any available way. This is why a trader needs to work not only with the rules of the strategy, but also with the state from which those rules are executed. And this is where it becomes clear why discipline in trading is not only about willpower. A trader may know the rules, understand the risk, see the consequences, and still break the plan if his nervous system is overloaded. Discipline begins with the ability to recognize your state before it turns into action. If a trader notices tension, urgency, fear, euphoria, or the desire to regain control, he creates space between impulse and decision. Professional behavior is born inside that space. State regulation allows the trader to return to breathing, the body, attention, the plan, and the internal position from which he can act consciously. This is why discipline is not pressure applied to yourself, but the skill of returning to a state where clarity, patience, and system execution become available again. When the nervous system is overloaded, the trader doesn't lose knowledge. He loses access to the state in which that knowledge can be applied. In a moment of intense pressure, access to the prefrontal cortex becomes reduced, the part of the brain associated with planning, rational thinking, impulse control, and long term decision making. This is why a trader may remember the rules, understand the strategy, and recognize the risk, but in real time act as if the entire system has temporarily become unavailable. He may see the plan, but be unable to hold it. He may know the right action, but choose the more emotional one. He may understand the consequences, but still follow the impulse because the overloaded nervous system is looking for a fast way to reduce tension. In this state, a person often tries to solve emotional overload through a trading action, but the market is not designed to regulate internal tension. The market requires clarity, structure, and the ability to stay connected to the plan even when pressure rises inside. This is why at Lotus Trading, state is viewed as part of a trader's professional preparation. Before analyzing the market, entering a position, or making a decision under pressure, the trader needs to return to a state where attention, clarity, and control become available again. Movement helps interrupt the automatic stress loop and brings the body back into active presence. Breathing helps regulate the nervous system and slow down the internal reaction. Body posture changes the signal the body sends to the brain and helps move out of a contracted state. Voice helps release tension and restore a sense of strength. Internal language anchors the identity of a person who manages capital rather than reacts to the market from fear or urgency. When these elements come together, the trader receives a practical way to return to himself before the next decision. This is the logic from which Lotus Reset was created within Lotus Trading. Lotus Reset is an original practice designed to help a trader quickly restore clarity, stability, and cognitive control before the next decision. In trading, state has to be restored quickly because the market is moving, price is changing, a position requires attention, and the internal tension can rise faster than a person has time to recognize it. This practice works through the body, movement, breathing, voice, and internal identity because a trader's state is shaped not only by thoughts but also by physiology. When body position, breathing, muscle tone, and attention focus change, the brain receives a new signal and the nervous system begins to move out of overload. The purpose of Lotus Reset is to restore access to clarity, attention, self regulation, and the ability to act from a professional position. The practice can be used before the trading day begins, before entering a position, after an emotional market move, after a loss, after a series of profitable trades, or at any moment when internal pressure to urgently do something begins to appear. When we speak about Lotus Reset, we are not speaking about removing uncertainty from trading. Uncertainty is a natural part of the market because no trader controls the future movement of price. The professional task is to learn how to meet this uncertainty without losing internal stability, clarity, and access to your own plan. Lotus Reset trains the ability to return to cognitive control in the moment when the market creates pressure. This means the trader learns to notice the body's reaction, regulate internal tension, and return to a state where the decision is made not from fear, urgency, or the desire to regain control, but from a professional position. This gradually forms a new level of behavior. The trader stops being a hostage to every market reaction and begins to act from an internal system. This is where the entire Lotus trading philosophy comes together. The market will always contain uncertainty, speed, risk, and pressure, so the trader's task is not to wait for perfect conditions, but to develop an internal system capable of making clear decisions in real market conditions. Professional trading begins when a person stops reacting to every price movement as a threat and begins to perceive the market as structure, information, and a set of probabilities. This requires knowledge, practice, risk management, experience, and internal maturity. Lotus Trading was created as an ecosystem where technical development is connected with psychological stability, behavioral finance, state work, and the quality of decisions. Because trading is not only about what a person sees on the chart, it is about who he becomes in moments of pressure, uncertainty, and risk. This is why our foundation is trading starts within. The free guide, The Geometry of State, is available on lotus-trading.com. Inside, you will find Lotus Reset, a practice for returning to clarity and cognitive control before the next decision. The link is below the video. Thank you for your attention. See you in the next Lotus Trading materials.